So, what does it really mean to be a sovereign investor? It's not about trying to find the next hot stock tip, that's for sure. It's about building a solid, unshakable foundation to protect and grow your wealth for the long haul. So today, we're going to break down the framework to do exactly that.
All right, let's start with a big question. What do you think is the single biggest risk to your long-term savings? I bet for a lot of us, the first thing that pops into our heads is a huge market crash, right? But what if I told you the greatest danger is something totally different?
Yep, you heard that right. Look, market crashes are terrifying. They get all the headlines, but they're not the thing that does the most damage over the long run. The real enemy, well, it's a lot quieter. It's slower, and it is absolutely relentless.
Which brings us to the main villain of our financial story. This is a force that's working against you every single day in and day out, whether the market is up or down. And it has a nickname, the silent thief. So who is this thief? It's inflation. You know what it is? It's that steady, almost invisible creep upwards in the cost of everything. It means that every single dollar or pound or real, whatever you've got, it just buys a little less tomorrow than it did today. So any money that's just sitting around, under the mattress or even in a checking account that's not earning interest, it's actually losing its value. It's losing its buying power.
And this chart, wow, it just lays it all out so clearly. You can see the two completely different paths your money can take. Let's say you take $10,000 and just let it sit there for 10 years. With inflation chipping away at it, you've basically lost a third of its real value. It's gone. But if you invest that same money and just manage to beat inflation, its buying power could grow by almost 50%. That difference, it's not just big, it's everything. It is the whole game. And that just brings us to this powerful quote. See, the biggest mistake you can make isn't picking a bad stock. It's doing absolutely nothing. Doing nothing is a guaranteed loss to inflation. So what's the takeaway? We need a defense plan, period. Okay, so how do we defend ourselves against this silent thief? It all starts with knowledge. Understanding the basic rules of the game, that's the first of 3 shields you need to build to make your money finally start working for you, not against you.
And the absolute superpower you get with this knowledge is compound interest. Think of it like this. It's your money making money, and then that money starts making its own money. It's pretty simple, right? You invest 100, you get 10%, now you have 110. The next year, you're earning 10% on the whole 110. Over time, this just creates this massive, powerful snowball effect. And honestly, it's the best weapon we have against inflation.
Now, the other huge piece of the knowledge shield is learning how to manage risk. And rule number 1 is diversification. But hold on, it's not just about owning a bunch of different stocks. Real, smart diversification has 3 layers. You got to spread your money across different kinds of assets, like stocks and bonds. Then you spread it across different countries, so you're not just stuck if your home country has a downturn. And finally, you spread it across different sectors of the economy. Think tech, healthcare, you name it. That way, if one area takes a hit, it doesn't drag your whole portfolio down with it. All right, on to our second shield, discipline. Because here's the thing. Once you know what to do, the biggest threat isn't the market anymore, it's you. This is all about protecting your money from 2 things, ridiculously high costs and your own brain. Okay, just look at this number for a second. 55.4%. What on earth could that be? It looks crazy high, right?
Well, that is how much of your potential wealth can be completely eaten by high investment fees over 30 years. That little 2% annual fee you see, it doesn't just cost you 2% a year. Because of compounding working against you, it can wipe out more than half of what you could have earned. That's insane. It just goes to show you, keeping your costs low is one of the most powerful things you can actually control.
So, we've talked about the external costs, but discipline also means fighting your internal enemies. These are the little psychological traps that our brains set for us. You've got FOMO, right? The fear of missing out that makes you jump on a bandwagon right after it's already peaked. Then there's anchoring, where you get so fixated on what you paid for something that you refuse to sell even when it's a loser, just hoping it'll get back to what you paid. And of course, good old overconfidence, where you think you're the genius who can outsmart the entire market, leading you to take some really silly risks. Having a discipline plan is what saves you from yourself.
Okay, so conquering your own mind is one battle, but you still have to deal with the outside world. And that brings us to our third and final shield. Trust. You're not investing in a vacuum, right? You have to know who you can actually trust in the financial system, and that is so critical. Now, look, there are some safety nets out there. For example, in Brazil, you have the FGC, which protects your deposits up to a certain amount if a bank goes under. But, and this is a huge but,
you have to understand what these safety nets don't do. They don't protect you if the market goes down. And, maybe most importantly, they don't protect you from getting terrible advice. Figuring that part out, that's on you.
So if you're going to work with a financial advisor, this might be the single most important question you can ask them. You need to know, are they a fiduciary or do they just follow a suitability standard? A fiduciary? They are legally required to act in your best interest. Full stop. The suitability standard, on the other hand, that just means their recommendation has to be adequate, just suitable for you. That means they can totally sell you a product that pays them a bigger commission as long as it's good enough for your situation. See the difference? That difference could literally cost you a fortune over a lifetime.
So you take these three shields, knowledge, discipline, and trust, and you put them all together. What you get is the complete picture. You get the roadmap to becoming a sovereign investor, someone who's actually in the driver's seat of their own financial future.
So let's just recap. It really comes down to these three key pillars, your three shields. First, you use knowledge about inflation, about compound interest to make sure you're even in the game. Second, you use discipline. That means keeping your costs way down and keeping your emotions from running the show. And third, you demand trust. You demand integrity. You only work with people who are legally bound to put your interests first.
And maybe this is the biggest shift in thinking we need to make. Winning at this whole investing thing? It's not about hitting home runs. It's not about finding the next big thing. Real, long-term success comes from playing great defense. It's about methodically getting rid of all the things that are guaranteed to set you back. That guaranteed loss from inflation, the total destruction of wealth from high fees, and the damage you can do to yourself with emotional decisions.
So, I'm going to leave you with one final question to think about. As you go on this journey, just keep asking yourself this one thing. Are the financial choices I'm making building my wealth, or am I just building my advisors? The answer to that question will tell you everything you need to know about whether you're on the right path. Thanks for joining me as we broke this down.